All right, the long-awaited merge date has been set. What do we all need to know? Fed Chair Powell speaks and the market pukes. Compound upgrades to version 3. What does this super exciting upgrade mean for all of us in the future of CeFi? All this and more. Hey, we're back. It's time for Money Talks. Hey, gang, we're back. Hope you missed us. It's been a few weeks. I took a few days off to travel. It coincided actually with a bunch of Fridays. So even though it was a short break, the travel all seemed to line up on Friday. So we decided to give everyone a well-needed break. Hopefully you all caught up on our episode with Raul Paul that we recorded just before the break. It's fantastic. If you haven't watched it, please go watch it. I've gotten fantastic feedback from everyone. Hopefully, we'll do a much longer, much longer episode, and really get into some of the NFT stuff that I've been thinking a lot about, and CeFi and the whole macro complexity that we're dealing with, which we'll get into in a few minutes. Markets are not happy with some of the comments from Chairman Powell, who's in the conference at Jackson Hole. Anyway, so at Abra, we're gearing up for some major product releases and company announcements in September and beyond. So today's show is going to be a little shorter while we prepare for the next few weeks, but we'll do our AMA. We'll answer all your questions. I'm sure a bunch of you want to talk about what's going on at Abra and what we've got planned for late summer and the fall. I've spent a lot of time the last few weeks and during the short break meeting with artists, technologists working in the NFT and DeFi space, and I'm spending more and more time thinking about the intersection of DeFi and CeFi and the implications for all of us. You probably or possibly saw the announcement from Compound this morning, and I think you're going to see a convergence between CeFi and DeFi services where centralized providers like us offer more and more DeFi services, but with a fantastic user experience. I'm super excited about this, and we'll get into it a little bit more in a few minutes. But this, of course, leads to our opening topic, which is the Ethereum merge. So it looks like the merge is going to happen on September 15th, finally. And it's been, I think it was first talked about like 6 or 7 years ago. And look, I think that while all the kind of crypto Twitterverse jokes aside, I think the way the merge has been handled is actually quite impressive. I think I was the first person to use this analogy, which is kind of caught on with the mainstream press, that, doing a migration like this is like trying to change a jet engine mid-flight, or I think the Ethereum folks are now using the analogy of changing a rocket's engine mid-flight in outer space, which I suppose is meant to be more in tune with times. But in any case, now the launch of the Beacon chain, which is the proof of stake chain, happened a while ago. And it's been running quite well. And so so when we say merge, it's physically that. It's basically saying, okay, we're going to merge the two chains and then deprecate proof of work. And that seems to be on track. And there was a really good blog that you should go read from the Ethereum Foundation. I think I can bring it up on the screen to show you, but if you haven't seen it, you should definitely go check it out. It's really well written, very simple, not just meant for developers. So just to put it in context, let me just state again, and then I'll talk about the implications for Abra users. Right. So today we're on this proof of work chain that you see in red, and a few weeks ago the Beacon chain went into let's call it production or mainnet, and now at some point around the 15th of September, with a deadline set for the 19th of September, those chains will merge. Proof of work will no longer become used by Ethereum. Hence, you no longer hear this reference to Ethereum 2.0. There is no Ethereum 2.0. Now it's just Ethereum. Obviously, we're now on a full proof of stake chain, which you see in green. And that sets us up for the next major upgrade, which will probably be in, I would guess, years, not months, which is a move towards full sharding, which starts to give us Visa and bank-like scalability, or I should say more RDBMS or traditional database-like scalability in a blockchain-based environment, which is astounding. So kudos to everyone who works on the open source Ethereum environment. What you all have done and are doing is truly astounding. Now, remember, Ethereum has no centralized CEO. It's not a single company. There is a foundation, but that foundation doesn't own Ethereum. Ethereum is just out there, right? And so the fact that the community has come around and coalesced around this is, as I said, extremely impressive. And I've never really seen anything quite like it before. And yeah, so as I said, if you go to the Ethereum website, ethereum.org, there is an article on what is the merge and how it works and what the implications are. Now, we are going to send out a series of emails to Abra users specifically on the implications of this for you. But my expectations right now is that there should be no implications for trading, meaning that you should be able to trade ETH uninterrupted. There may be brief interruptions to deposits and withdrawals, no interruptions for earn or for ETH staking, meaning if you're earning ETH via staking or earning ETH via Abra earn on the lending side, you'll have no interruption. You should have no interruption for trading, and there should be no interruption for deposits. Let me restate that. There may be a brief interruption for deposits and withdrawals. We'll have more to say on that in the next week or so as we get closer to the merge. We want to push the updates out as far as we can to make sure that we have everything absolutely correct. And I think what I'm saying is going to be more or less accurate, but we'll have more to say on that. And obviously, we'll have at least one, probably two more money talks before the merge happens. So there'll also be more chance for you to ask questions about it. I'll take questions today. Tech Sun says it's easier to change in outer space due to weightlessness. Yeah, I get that. So who knows? It's all good. I'm very impressed. As a software guy, a longer form software guy, I'm very impressed with the complexity of this. And some of you may not know, I used to develop trading systems and portfolio management systems and worked on Wall Street. So I have some sense of the complexity of what's going on here. And it's not easy what they're doing. And so we all owe them. Think about it, right? I mean, Ethereum is running all the stable coins, USDC and others, DAI. It's running all of the NFT projects on Ethereum that you read about with Bored Apes and CryptoPunks. It's running DeFi. We'll get to Compound in a few minutes. It's truly astounding that this truly has become the world's computer, and yet we're able to do a migration like this without actually suffering any kind of downtime. Which really doesn't make sense in a blockchain environment. You should never have downtime. So again, kudos to the team. You can check that out. We'll have more to say on the implications for Abra users in the coming days. I'll answer any questions you have in the AMA. Okay. By the way, let's do a country check. I haven't seen many of you in a while, so let me know where you're dialing in from. I guess I'm showing my age there. Where you're logging in from, and we'll do some shout outs. So. Hope you all have been having a great summer, and let's get into it. So that's Ethereum. Like I said, we'll get to the charts in a minute. But on the technology side, I think I'm pretty bullish. My suspicion is this is going to go really well. We're not going to see any snafus. There's been so much testing. Now, the problem is always a difference between the test environment and a live environment. No matter how much you test and simulate, it's never 100% the same. Anybody who develops software knows that. But anyway, I think they're doing the best job you can possibly do under the circumstances. So kudos to them. All right. So topic number 2, let's talk about the Fed. So I was watching this morning on CNBC. I don't even know why I turn on CNBC anymore. It's just so aggravating. It's like a big trailing indicator for reality. I mean, anyway, so I did watch part of the chairman's comments this morning while I was getting my notes together for Money Talks. And basically what he said is we're fully committed to getting inflation under control. Now, of course, there was no reference to the fact that we shouldn't have been in this position in the first place. And it was his perspective on what is transitory. And that word, which kind of hangs as a noose around his neck since he made those comments, I guess about 18 months ago or 24 months ago, whenever this brouhaha started. But now he is fully committed, whatever that means, to taming inflation. And he also acknowledged that this may be at the expense of the consumer, which means we may see job losses. We may see, he didn't use the R word, recession, but he basically did talk about pain. And that's obvious, right? We've seen the fastest credit tightening in history. And again, go back and watch the episode with Rob Hall from a few weeks ago. Was a masterclass on really simplifying how to think about this. But let me just show you really quick. Let me stop this share here. Sorry, I should have stopped that a while ago on the ETH merge. Let me show you a couple of things that I've been looking at, right? So let's see. Let me start out with PMI, right? So we talked about PMI recently, and here's the print that was released on U.S. PMI composite. Purchase Managers Index is basically considered a leading indicator for where the economy is going because it points to things like supply chain inventories, plans for purchasing, et cetera, going forward. And you can see that if you go all the way to the right, you can see that on the August 23rd print, that the PMI is plummeting. Now, if you look at the last two times that it was headed in this direction with such a steep decline, it was basically 2008, and everybody knows what happened in 2008. And of course, 2020, which was March 2020, which was basically the lockdown for COVID. And we have no lockdown now. If anything, we've got full employment. And people are actually now, because of the slowdown, starting to come back into the workforce because they're dipping into savings, which is another phenomenon that the chairman didn't address today. Because again, they say they try to look at data as a whole, but the reality is they're a big trailing indicator, and there's a tremendous amount of politics involved in this. And they're very, in their minds, very careful about the signals they sent, but they're not willing to basically call information out in real time. We are in recession. At this point, I'm going to say I don't care what anyone else says. We are in recession. We've been in recession for probably 4 months now, and my guess is we'll be in recession until probably the end of the year. And I would guess that I thought that we would see the great pause in September. I think we may see it in October or November now, given the comments today, and that's part of why the markets are puking. Or at least they were before we started the show. We'll get back to that in a minute. So here is PCE, the PCE numbers, which is a broader inflation number, which includes more data than the CPI. And you can see that seems to have peaked. If you look at the 1 month change back to June versus July, the fall off is huge. I'm guessing this is the largest fall off in history, at least in modern history. And what that tells us is that the economy has basically crashed into a brick wall, and the Fed is not willing to admit it yet. And they don't, in their minds, don't need to, because they think that the average consumer doesn't understand what the hell they're talking about anyway, which by and large may be true, but that doesn't change the nature of their responsibility. They've really created a mess for themselves because, one, they shouldn't have done all of the rate decreases that they did in the first place, which has caused massive global inflation. The U.S. is basically creating a drag on global markets, and we absorb no responsibility for that. And we, meaning the people, the few people, unelected officials who basically make these decisions, bear no responsibility in their minds for the fact that all of these countries that basically, don't have a global reserve currency are now suffering massive inflation because of the money printing done by the United States. And their inflation will linger long after ours. Their economies will be in shambles long after ours, partially due to this idea that inflation was going to be transitory. And in reality, wasn't even caused by our money printing up front. A lot of it was due to supply chain issues related to China and other things during COVID. And they should have known that. And history actually showed us that. And many of us warned about this at the beginning of COVID, that they shouldn't have been doing this, and et cetera, et cetera. Anyway, we'll see how they react. My gut now is that the great pause will come in October or November instead of September. That's unfortunate for the economy in the short term. But again, they shouldn't have lowered the rates in the first place. So it may be necessary for the economy, like they said, to absorb this pain in order to get back to parity. And the reality is maybe somewhere in between. Anyway, all right. So we'll talk about how this affects crypto and other assets in a moment. Oops, sorry, there's proof of stake again. So just wanted to give you some context on this. Let me just go to crypto prices for a minute here. You can see this is the daily. Let me zoom in a little bit on the daily here. You can see on the Ethereum price, it really fell off a cliff. We were actually up, right? There was a big spike up in the minutes before. Excuse me, in the minutes before Chairman Powell's speech, and then it just literally fell off a cliff in the hours or so since he's spoken, to the tune of about 6% on the daily print since the opening for yesterday, which is about 15 hours ago. So we've got about 9 hours to go or so in today's trading day, and it's not looking good. But that having been said, we have recovered most of the gains since early June, right, up until today. I just expect more downside based on the comments. And we've basically been in this range with a little bit of a head and shoulders pattern forming since mid-July, which is now over a month, right? And so the market has been looking for some direction. And my guess is that we're going to experience some more volatility. Now, up until today, over the last week, there's a bunch of you can see some head and some spinning tops here in the charts, right? You see 4 days ago, 3 days ago, and even today, up until 2 hours ago, it looked like another spinning top was forming. And what that basically was telling me, up until today, or up until an hour ago, every dip was being bought almost immediately. And that stopped. That stopped an hour ago. Clearly, we're in a sell-off now, and the markets basically believe that the money supply is going to contract for an extended period of time. And just like crypto gets a huge benefit, an outsized benefit from increases in the money supply, it is going to get, at least in the very short term, a kind of an outsized negative effect from contracting in the money supply. Now, I see Ethereum as a little bit different from Bitcoin for a few reasons, right? I mean, Ethereum via 1559 and the migration to proof of stake is becoming deflationary at an incredible rate, and will become more so. So once proof of work turns off, those mining rewards will migrate to be staking rewards. And the amount of crypto distributed via proof of stake is going to be a fraction of what it was, if my math is correct, via proof of work. And Arthur Hayes, if you don't read his blog articles, has written some phenomenal analyses on this. And I'm trying to get Arthur on Money Talks for a few weeks out. And his writing is prolific and super interesting and way beyond the technicalities of this show, but definitely worth a read if you can work your way through it. Anyway, so his point is that Ethereum has tremendous upside because of the fact that it's becoming deflationary, has all of these applications, and the Fed at some point is going to have no choice but to pause, and it's going to be game on. I thought that was going to happen in September, October. I still think it'll happen before the end of the year, but I was probably too aggressive in my assumptions. You are going to get this kind of congratulatory Federal Reserve commentary at some point, which says, okay, it looks like prices are under control. We've done our job. We're going to pause and see what happens. That is basically the Fed telling you we're in a recession. We got no more shit on the shelf to bring to bear to deal with this. We've stopped rate hikes because we don't know what else to do. And we're going to wait and see what happens because we don't know what else to do. Okay. That hasn't happened yet. Like I said, I thought it might happen in September. I think November is probably more realistic now, given the commentary today. Okay. So that's Ethereum. That is my expectation for the short term. I am going to personally dollar cost average. I don't give investment advice on Money Talks, but personally, I'm going to dollar cost average here for the short term on Ethereum. and add to my position on and certainly any spikes below 1,300. I'll probably increase even more. But I would be shocked if we see new lows below, let's say, 950 on Ethereum. I just don't see it. But what do I know? I'm just one person. So anyway, so that's Ethereum. So really interesting. Congrats again to the team there, and also on the Fed. We are going to look to to early September for the next set of PMI and inflation numbers before the next Fed announcements. But right now, even the bond markets, which tend to lead the way, are basically saying we have no idea what's going to happen. And they're somewhere in between a 50 and 75 point hike for September, which isn't really going to move the needle on crypto at all. The markets, and especially crypto, are basically trying to figure out when the pause is going to happen. 50, 75 points makes little to no difference for crypto. What really matters is directionally the mindset of, do we need a pause? Are we really in recession? Are we going to publicly admit it? Are job losses piling up? Are we going to admit it, et cetera, et cetera? Okay. I think the fact that people are tapping into savings, the number of people seeking work is actually increasing, meaning people are coming out of sitting on the sidelines and actually looking for work now. So the pool of people who we would consider in the denominator for full employment is actually increasing. And I think the reason for that is that people are tapping into savings now as a result of the inflation. Okay, so enough of that. More detail that I wanted to. So I wanted to talk about Compound. This is actually something that I wasn't planning to talk about today, but it came up a few minutes before the show, and I haven't fully dug into all the details. And by the way, we had Rob Leschner on the show, I don't know, it's about maybe 6 weeks ago. Rob's brilliant. And this was in the middle of like the whole kind of Celsius, Voyager fiasco. And so having Rob on during that time frame was super interesting, of course, and he gave us his thoughts on DeFi versus CeFi, and so I'll talk a little bit about. You should go check out the Twitter. I retweeted an update from them on what's happening with Compound. It's super interesting. And I'd like to get Rob back on and talk about the details, but let me just give you some highlights. So it's really interesting. The way they've done it now is you can basically borrow a single asset against a single type of collateral. And you obviously won't earn interest on the collateral, but you'll be able to borrow with less risk of liquidation. Now, I think that, and you won't, and it'll cost you less gas, which is always a problem. Nobody's going to borrow $100 if it costs them $100 in gas fees. So I think this entire model starts to look more and more interesting for companies like Abra to actually offer as an alternative, right? So no matter what we say, some of you are just not going to want to work with a CeFi company for borrowing. Most people will today, and our lending desk and our lending facilities continue to grow. But I think having this alternative of DeFi rails for facilitating borrows is really interesting. And I think Compound is really leading the way here, and the way their governance system works, and the way that the voting happened here is just very impressive to me. And I would invite you to check it out. So you'll be able to borrow USDC using ETH, Wrap Bitcoin, Link, Comp, and even Uni as collateral. So super interesting. Congrats to the Compound team. Okay, so let's see. We'll spend some more time on that in a future show, but I wanted to give them a shout out today. And let's see, what else do we have on tap? So let me just answer a few questions here and give you some thoughts on some potential upcoming announcements without giving away too much. I see we've got folks here from throughout the U.S., different states. Paris, I see Texas, of course, Philippines. I see LA. I see New York. I see what else do I see? I see Canada. More Philippines, more US, more Canada. Cool. Yeah, I did see Julian. Some of you were asking about Julian and the Crypto Banking Alliance. We did spend a couple of days together catching up and just thinking it through. Some of the things we talked about is their plans for migrating CPERCs to a DAO, and our thoughts on how we could support them there. I'm really bullish on that idea. I've been looking myself into myriad DAO models, and I really hope that this happens, if not this year, early Q1. We talked about how the American Express card launch at Abra could affect CPERCs and what kind of special opportunities the CBA might be willing to support for having a crypto credit card on the American Express network. So we're considering some proposals and ideas there. They're very open to it. They really love that product. And then we talked about NFTs a lot and how CPERCs would be used in an NFT environment, and are there other ways where we can support, their plans potentially for future staking initiatives. So lots of interesting conversations. There's been a bit of a lull on the listing conversations. I think that some folks have been spooked by this whole the Coinbase thing with the SEC, which has nothing to do with us, nothing to do with CPERCs or the CBA, because CPERCs is clearly a utility token. There was no fundraising going on, but clearly it's kind of slowed down everybody's thought process as it relates to this. But that having been said, we're as bullish as ever on CPERCs and the plans and what we could and should do there for the future. We'll have Julian on in a few weeks, I hope, and we'll get into some more plans. But we have some announcements we're going to make first, and then we'll get back to CPERCs. This of course, brings us to trading. We are now in live testing for our new trading system, which is finally going to go live in the coming weeks, and it's awesome. And so you'll see lower spreads, better rates overall. Eventually we'll start increasing limits, and this will also mean that you won't have to chunk orders. You'll have an improved market entry system, and then that will lead a few weeks later to limit orders as well. So really excited about what the team has implemented throughout the summer on trading, and our goal is to give you advanced order types over time, but to do it in a way where it's really easy to do, right? Most people, for example, if you're an advanced trader or a trader at all, you obviously know what a limit order is, you know what a stop order is, but many of the folks watching this program don't, but they still would want the protections of a stop and limit order if it was explained to them in a very simple way, and that's our goal at Abra, Okay, so let me answer a few other questions. Who owns our coins? This is actually at the bottom of the list, but I'll answer first since it just caught my eye. Abra or us, you own your coins. The only exception is if you're using the coins as collateral in a loan, then you have basically put those coins effectively in an escrow type of process to lock them up until the loan is repaid, and Abra has the right to earn interest on that collateral at the same time. Okay. A few other questions. Excuse me. Very dry here in California. Big Tech Sun asked if I was suggesting there would be no more interest rate hikes after September. I thought, 2 months ago, we might see a pause in September. We're not going to see a pause in September now. We're going to see more rate hikes in September. I think the question becomes two things. If the velocity decreases, meaning we go from 75 to 50 bips, and they say they admit at least that we're seeing a dramatic slowdown, then that would point to an expectation that we could see a pause in October. But my guess is we'll actually see the pause in November now, unfortunately. Okay. So, but again, it's just, ask 10 people who track this stuff and you might get 10 different answers. So take it for what it's worth. So I talked about the CPERCs conversations, and that's looking really good. I'm really excited about it. So somebody was asking, I got a couple of questions here about how Abra sources liquidity and how we route trades. Our goal over time is to basically order route across multiple exchanges. And so we're not dependent upon any one exchange. And so that's always been our plan. And that will remain our plan. And Yeah, I think we have probably the best architecture now of any company I've seen in the retail world for lowering spreads, raising limits, protecting users on the trading side, and we've come a long way. Excuse me, in our new system. So we'll have more to say about that in the next couple of weeks. We'll bring back the product team. Gave them a break this week as well. They actually worked throughout the summer just to get everything live, and they're working on the Amex card, working on the NFTs, working on trading, working on more liquidity options for getting money in and out of Abra in different countries. There's so much that they're working on in parallel. It's actually crazy. Then on the institutional side, I know we've got a lot of folks from our private banking services that are watching. We're launching a new over-the-counter trading service in September with increased limits, lower costs, better spreads. So those of you trading in very, very large amounts who want an over-the-counter solution, you can contact us directly either via support or the sales site and get in touch with us, and we'll set you up there. But I'm really excited about what the team has been working on there. We've got a new trading team in Abra that is able to source large bulk orders. We're looking at different types of derivative contracts that we'll be able to offer directly to institutions and private banking clients. And that's something that we're also spending a lot of time on. Okay, so I had hoped to keep the show down to 30 minutes. We're at 30 minutes. I may take a couple more questions. By the way, I think we're gonna have Dan Tapiero on next week. If you don't know Dan, he's the founder of 10T, which is a major player in the crypto venture private equity space. He's a very prolific macro investor, has had really interesting comments on Bitcoin, Ethereum, the direction of crypto as it relates to macros, and really good compliment to the commentary and interview we did with Raoul Pal from a few weeks ago. And I'm actually going to be on stage with, I'm trying to remember which conference it is. I think it's the Digital Asset Summit in New York. I'm going to be speaking at SALT with Anthony Scaramucci in New York. And then I think a few days later, I'll be on stage with Dan at the Digital Asset Summit. So maybe I'll see some of you in person at one of those events. Okay. All right. So I am seeing some more questions, but a lot of it is repetitive. So I'm going to call it there and give us all an early weekend. So that's my comments for this week. I'm really excited about what the Abra team has planned. We have a really, really big announcement for early September, one of the biggest we've ever done, and it affects all of you. And I have been tracking. I do have a few questions here. I just saw another one. I have been tracking what's been happening to some of our competitors that didn't survive the whole lending fiasco. I can't comment on the bankruptcy process they're going through, except to say we do hope that it turns around and works out well for everyone who has funds locked up. It's really painful to watch. We continue to practice the same sound risk management policies that protected us in the first place, meaning customer funds come first and Abra's profits come second, distant second. Okay, so to that end, we have looked at what's going on with the others in the space, and we haven't seen anything that we thought was realistic for us to step in yet. Although we're trying, we're looking at it. No promises. It's possible nothing happens, but it is something we would like to help if we can. We just haven't figured out a way that really makes sense for all of you, us, and the courts. So anyway. So we'll have a lot more to say about Abra's plans for September and October in the next couple of weeks. It's going to be a really exciting second half of the year or end of the year for us going into Q4, and can't wait to share all the news with all of you. All right, so we're going to leave it there. Those are our updates for this week. Thanks for joining, and we will see you next week on Money Talks.